Support and resistance points are very important entry and exit points you need to be aware of if you want to trade successfully. A support level is a price at which there is a big demand for an asset. Simply said, if the asset drops to it, a lot of people will start buying and the price will bounce back up due to this buying power. Therefore, knowing what the support is, which you do based on the trading history of the asset, logic, broken back. You can use this knowledge to exit your position, which means selling your assets. Why would you want to sell? If a support is broken, it means the price will drop even lower because the support of buyers is not there anymore. If you, as a trader, spot the support line to be broken, you want to exit your position at a minimal loss and wait out the drop to buy back after the drop reverses, which is otherwise also called shorting. A resistance level is a price at which there is a lot of supply for an asset. Simply said, if the asset rises to it, a lot of people will start selling and the price will drop due to this sell power. Knowing what the resistance level is provides an opportunity to sell your holdings or short them, which again means selling for high and buying back for lower, which would be ideally the support level. Support levels are logically under resistance levels, and the price has a tendency to bounce between them. A broken resistance, which is when the price rises above this level, means there is a lot less supply and more demand. Such stock or an asset is expected to rise in price even more. If you spot a broken resistance, you want to buy an asset and enjoy the ride up. If you have sold at the top of the resistance level, expecting the price to go down from there, and it didn't, you need to at this point buy back as soon as you can to cover your losses and still enjoy the rise up. A broken resistance usually then becomes a support line for the next price movements. And a broken support line usually becomes a resistance point for the next price movements. The longer the support and resistance lines function, the more significant they are. If you have support lines from weekly or even monthly charts, those will have more strength than the ones from a 5-minute chart. Otherwise, though, recognizing support and resistance lines works with all time frames. Last, but very important thing before the screen sharing to remember, you have to give the levels a bit of room. It will never be completely precise. You can end up selling or buying on a false broken support or resistance alarm. Always wait a bit to confirm the breakage. Now let's do some screen sharing. Hello everybody and welcome to the video about support and resistance levels. First things first, you need to go to a platform that allows you to display charts and draw these levels. Such platform is, for example, tradingview.com. You can see the URL right here. We have displayed the Microsoft chart, and currently we are looking at a weekly time frame, which is a very large time frame where every candle represents 1 week. So how to draw support and resistance levels? It is no math, it is not complicated. The only thing you do is that you observe the chart and you observe where the price has stopped within a rise. So you can see that the price was somewhere rising and then it stopped at a certain level and dropped back down. And then it went back up and back down, back up, back down, back up, back down. And you want to find a certain level where this happens a lot, okay? Where it is very common that the price actually stops and drops down, and the same with a support level. You want to find that level where it very often happens that the price just stops dropping and bounces back up. So for the part that we are looking at right now, we're going to draw the resistance and support line. So I'm going to click the tool right here. We have a purple, perfect. And I'm going to click once and I'm going to click twice. So approximately this would be our resistance line. As I told you, this is a weekly chart. So this is a very strong resistance line. You can see that it was working very often here and here, approximately here as well, here and here. And now we're going to draw together support line. We're going to make that one red. And we're going to click once more and drag it to the points. Okay, so approximately this would be our support line. You can see a drop here, a drop here, drop here, drop here, drop here, and then a broken support line and rise up. Okay, so as I told you, and it is clear from here, it never will be exactly that level. You have to give it a little bit of space. You can see that here it went under the support line. Some people, if they're unexperienced at this point, they may start selling their assets because they think that it's going to be a broken support line and it's going to drop even lower. But you can see that it bounced back up from there. So you have to really give it a little bit of space before it drops under the support line. And the same with resistance line. You can see that here people could have been already, oh my God, we're going up, like let's immediately buy. But it was just a little cross over the resistance line and then drop back down for actually years, basically, because as I told you, we're looking at weekly chart. So this is a very, very long time frame. So this is how you would draw support and resistance lines. And now let's also check, as I have told you, sometimes it happens when there is a big rise that support lines become resistance lines. So for example, here we had a support line, and also this indicates there are many support and resistance lines. Okay, it's not just two, so you have to constantly be overdrawing them. So you can see that here approximately we had a support line for this time frame, for this formation. You can see that there was a bounce down here, down here, down here, and then there was a breakage, and then it basically became a resistance line, because you can see this, by the way, is a formation that really confirms a breakage. If from the breakage, from the broken support line, it bounces up, but it stops at the support line, at the previous support line, then you know it's going all the way. And as I also told you, the psychology of the market is that we're all looking at the same signs. So basically, if people spot that it stopped at the support line, they all start immediately selling because they're trying to short it. Because for them, that's a sign that it's going to go down. And as a consequence, because of all these people selling, it actually does go down. You can see there was then a huge drop. Then there was a reverse, and you can see that it crossed the previous support line and then stopped down here, went back up, and then it went down. That's because of a formation called the double top. We will talk about this as well. But the important thing I wanted to show you is that this line, then for quite some time, it actually became a resistance line. You can see a resistance here, then a little cross here, but still functioning resistance line. Here, here, all these points are the bumping into the resistance and then dropping back down. Only then we see a breakage, and then again it became a support line. So that is why it's important to draw these lines within certain time frames, and always remember, the larger the time frame, the stronger the support and resistance lines are. So if you are going to be drawing a support and resistance on a 30-minute chart, but then there is one big support line coming, you can be more reliant on that particular support line. Okay, that one is more important. But otherwise, support and resistance lines you can really draw in any time frame. They work in any time frame. You can also see that this was kind of a consolidation market, kind of a stagnating market, but then there was a big breakout upwards. So this is a bullish market right now. And obviously drawing like a flat line like this would not work in this market. That is why we also have rising support and resistance lines that I'm going to show you in the next video. What should you remember from this video? First, support lines. Support lines are price points where there is a lot of demand. A price has a tendency to drop to it, then people start buying and it bounces back up. Resistance line is the line to which it bounces back up. It is a price point where there is a lot of supply. A price has a tendency to rise to it. At this point, people will start selling, and the price has a tendency to drop back down to a support level. How to use the two? You simply try to sell near the resistance levels, and you try to buy near the support levels. A broken support. Broken support has a tendency to become a resistance line. When you spot a broken support, the best strategy is to sell at the start of the breakage, wait it out, and buy back cheaper. This is also called shorting. A broken resistance has the tendency to become a support line. The best strategy is to buy at the start of the breakage and then sell at the peaking top, which is otherwise also called going long. In general, the larger the time frames, the more strength and value the levels have. You can count on them with more certainty than if you are looking at a short time frame chart. Another thing to remember is that the price never stops exactly at the level. You have to give it a bit of space up and down before taking action.